Welcome to part 3 of a series where I asked AI on what top 5 stocks I should be looking at buying in 2025 for a potential breakout. In this episode, we're going to be looking at Axcelis. I'm going to struggle to say this company's name throughout this video. For some reason, I just can't say it, but Axcelis is the topic for this video. So what do Axcelis do? This company designs, manufactures high-precision systems that implement ions into semiconductor wafers. This process modifies the electrical properties of the wafers, making them suitable for various semiconductor applications. They also have a platform called Purion, which I'm also probably saying incorrectly. This is a flagship product line, offering advanced solutions for implementation in logic, memory, and power device manufacturing. They provide equipment upgrades, spare parts, and maintenance services to ensure the longevity and efficiency of their systems. Their products are used in industries such as consumer electronics, automotive for chips, used in EV, autonomous driving systems, and telecommunications such as 5G. So they do have a good, strong footing within the markets in which they are in, as I imagine, don't quote me on this, but I imagine companies such as Tesla do use their systems. They are also an R&D leader. The company invests heavily into research to improve precision, efficiency, and scalability of ion implementation processes, addressing the evolving demands of the semiconductor industry. They have a massive global reach, as this company is a major semiconductor manufacturing provider, positioning itself as a critical player in the supply chain for advanced semiconductor devices. This specialization has enabled this company to grow alongside the booming demand for chips in the applications such as AI, IoT, and renewable technologies. So that is enough about an overview of this company in case you weren't familiar. Now let's take a look at their financials. So their recent financial revenue shows $256.6 million in the Q3 of 2024. Full year revenue is projected at approximately $1.08 billion, reflecting a slight decrease compared to 2023, which was $1.13 billion. Gross profit margin is currently at 42.9%, a slight decline from 43.8% in the previous quarter. Operating margin is at 18.3%, indicating efficient cost management. And net income is at $48.6 million, or $1.49 per diluted share, slightly lower than Q2 2024, which was $1.55 per share. What is the growth and outlook for this company? They have an optimistic outlook long term, driven by demand in the silicon carbide sector and increased adoption of advanced ion implementation technology. However, they anticipate a short-term challenge in mature semiconductor markets. Q4 growth guidance is showing $245 million, with an estimated earnings per share of $1.25 or $1.25. So despite a slight revenue decline in 2024, this company maintains strong profitability with a solid balance sheet, positioning it well for long-term opportunities in semiconductor manufacturing technology advancements. So with that being said, what does my personal system think about this stock? Let's take a look. So after putting all the data into my system here, we can see a liquidity rate to start off with. We are currently well above the one in which we are intending to have. This is incredibly strong for this company, as we have at least $1 of liquid cash to pay back the total debt for each quarter. As in the world of business, cash is king. You don't have to be selling your assets in order to pay out your debt. Furthermore, the trend lines are only expecting this to increase, so this is incredibly bullish. Now we're going to take a look at the retention rate. This is a also positive story. We are currently down on each quarter for the last 3 quarters. However, it is still a very strong retention rate, as we are at 18.9% in the previous quarter. Ideally, you want to see a company around the 10% mark, and this is just perfectly fine. This is actually quite good. This is, again, very bullish. As we mentioned earlier, they have very good management costs, so they are perfectly fine in the world of retention rate. So looking at the free cash flow, this shows the basically excess cash at the end of each quarter, which can be used for paying out debt, stock buybacks, or paying out dividends, in which they don't pay any dividends out. However, looking at the free cash flow, this is relatively steady. There is nothing to worry about here, so I won't stay on this topic for too long, but yeah, perfectly fine, nothing to worry about. So now moving on to the 365 exponential chart, we can see that we are currently below the 365 moving average on the price range. However, looking at the volume, we are just below, pretty much bang on where it should be. Looking at a finer detail on the 91 and 90-day moving averages on a price chart, we're expecting to still go down in the next quarter. And again, we're very much on target with the 90-day volume. Current PE ratio is 11.14, a 52-week high of $158 and a low of 69.35, this being a difference of 89.26, and the current price is at 75.29 and a beta rate of 1.52, so that means we outperform the Nasdaq on a volatility scale of 1.52 times. Looking at the volume to average volume, we are currently just below the average volume. So with that being said, what is the conclusion before we get on to Graham's formula? Well, it does look a bit bullish. Not really. Short term, definitely not. But maybe around March next year, it could be a stock to watch. So it will not be based off of this so far, something that I will be buying into short term. So let's move over to Graham's formula. So with that all in mind, what does the system think about this stock with an earnings per share of 6.76 and an estimated growth in the next year of minus 15.97? It gives us an intrinsic value using Graham's formula of 47.71 on an unrevised formula, and the revised one, which is a bit more of a bearish formula, is a 39.89. With a safety of margin of 65%, this actually indicates a strong buy. So having both formulas say buy indicates a strong buy pressure from this system. So with that being said, that is enough about this system. Let's see what the analysts think about this stock. So looking at what the analysts are projecting for the next 90 days, we are seeing a high of around 120, 110-ish and a low of around 30-ish. Personally, I do think it will reach around 82-ish, I think, personally, in the next 90 days. I think we're going to see a lot of sideways momentum between now and 2025. However, early 2025, in my opinion, it could be a good time to get in. With a 7 analyst basis saying a buy over a hold or sell, this is relatively bullish. It could be stronger, of course. However, they are actually projecting a target price of around $120, sorry. So that is pretty positive for this stock. This stock is, however, not without their competition, as they have key competitors such as Applied Materials, Lam Research, and Tokyo Electron. What they do offer is particularly niche, as ion implementation is very difficult to actually manufacture. However, this company is definitely ahead of the curve with the ion implementation strategy, holding a dominant position in this market. Their Purion platform is widely recognized for innovation and precision, targeting growth in silicon carbide chips. So it does look like competitors do have a lot of catching up to do before they can have this same sort of manufacturing power as this company. However, this company has a revenue of 1.08 billion, making it significantly smaller than its competitors such as Applied Materials, which is 26 billion, or Lam Research, which is 19. So it does have a lot of catching up to do. But of course, it is highly specialized stuff in which they are doing compared to the broader manufacturing in which their competitors do, in fact, do. So when will it be a good time to buy in? The answer is looking at this not now, with a Sharpe and Sortino ratio of minus 12.98%. That shows the risk to reward is currently low, and we are well below the moving averages for the 30, 50, 100 and 200 day moving averages. So ideally what we want to see is a position where we are above this moving average. But I think this might have potential in the first quarter, such as March of 2025. I won't be buying into this position anytime soon. I do think it could be a similar position to the last video in which I've just done an analysis on, which AI also recommended, which will be in the top right of this screen now, if I remember to put it in. So that sums up this video. It's definitely something to watch. It could have high breakout potential in 2025 should everything go to plan for them. So with that being said, I hope you have enjoyed this video. Again, I'm not a financial advisor. None of this is financial advice. If you have found this video useful or enjoyable in any sort of way, please do leave a like and subscribe, and I will see you for the next video.